Hello, my name is Ryan Davis with Independent Mortgage Brokers. I wanted to talk to you today about my experience in mortgage banking and brokering for the last 22 years and why we created Independent Mortgage Brokers. I owned a brokerage company back in 2007 and 9. At that time, the technology wasn't there. You couldn't talk to underwriters directly, and a lot of the fundings weren't smooth. I decided to go to the captive mortgage banking side, and I was there for 10 years. But the problem that I faced, and I'm not sure if you resonate with this or if this sounds like your story, but I would be sold on these great rates, great customer service and turn times. But then about 6 to 12 months after I was at the company, the rates would start going up. And I don't know if it was the branch manager or the company, but it felt like they knew that they had your database. You had already told all of your referral partners that you were going there. And it was almost a business model to where each of the companies I worked for, after 6 months, the rates would go up. And inevitably, they would also start cutting pay. But the straw that broke the camel's back for me was that it wasn't the pay or the service. It was that I was losing too many deals to my competitors. Our rates were anywhere between 0.5 point to a point out. And I was losing credibility with my referral partners, my realtors and my clients. I felt like I needed to give the broker world another shot. But when I went to go work for another brokerage company, I faced another set of problems, not the ones that I did in 2007 and 9. The customer service, the support, the speed, the technology, all of that had been remedied. But the problem was I was on an island. There was no community, there was no training. It was, hey, here's 50 lenders, here's your logins, go. When we started IMB, what we wanted to do is we wanted to take the best from both worlds. Our whole vision is that customer service and support are number one. What good is good rates and great pay if you can't close on time and you don't have that support? What we've done is we've created a portal that has all 50 of our lenders. We rank them from best to worst, and we have a link to their turn times, their overlays, what you need to know about that lender to mitigate any downsides, because no lender is perfect, and what they do best and what they don't do best. That helps all of our loan officers know where to send what. We also have lender summaries that are very granular that tell all the different policies and programs that a loan officer or a processor would need to know. Our portal has a search capability where you can search any lender in combination with a policy or program and see whether or not that's something that will work for your scenario. The portal provides our loan officers a way to know where to send what. We also have program matrices, and we have essentially like a Slack chat type of a community where everyone is chatting and helping one another. It creates a sense of community. Everyone helps support one another by sharing best practices, sharing marketing and sales information, sharing program knowledge, and which lenders are their favorite and which ones might not be. And so what we've done is we've top graded all of the lenders out there. We rank them, and that way every month, if turn times change or there's a lender that's a little bit slower, we're updating our community so we can protect your reputation. We also have training. We have a ton of videos in our portal library. We have anything that you would need to know about sales, realtors, programs, in the broker world. All of that's within the portal. We don't have mandatory meetings like we did a lot of times in the banking world. I had a coffee cup that said I survived another meeting. That should have been an email. If you can't go to the meeting, then no need to. We record all of them and we post them in the portal. We have 2 to 3 socials per year. So we have that face-to-face community as well. We're licensed in about 12 to 15 states. We're working on 3 right now. We have 50 different lenders. On average, we're around 0.5 point or more better in rate, and we pay roughly 50% more in pay. That tends to be, in Denver, Colorado, at least around $3,000 more per deal. What's great about the broker world is that you are in charge of your commission. If you need to make less to be able to win a deal, you can do that. That's called borrower paid commission. And instead of getting paid by the lender, where we're at 200 basis points, and then we charge a low flat fee to our loan officer, you can actually charge the client an origination fee to be able to win that deal. So there's no more begging management and you're locked desk for price exceptions. You are in charge of your book of business and how to price it. So if you're trying to win that new realtor and get that new account, or this is a really important client that you need to win, you can make less on the deal by charging them an origination fee. The way that borrower paid commission works, it's different than lender paid commission, is that you're charging the borrower an origination fee, but then you're typically getting a lender credit from the lender that would help to offset that. Technically, the lender credit goes to cover closing cost, third-party closing cost, and prepaids. but it helps make the cash to close a little bit more palatable. That's the way that borrower paid commission works. Typically, if we go borrower paid, the rates are somewhere between a half a point to a point lower than the average mortgage banking company out there. Our values at IMB are first and foremost service and support, and then it's giving the best rate to our borrower, and then it's also giving the best pay possible to the loan officer. That way we can put more money into the borrower's pocket and into the loan officer's pocket. Since we've started IMB, the customer support and service that we've received from our lenders and account executives has been amazing. We can still close in 2 weeks. We can do TBD underwrites. We can talk directly to the underwriters. And the majority of the banks that we work with, we have negotiated that they will allow us to balance a final CD with title prior to a clear to close, and we have no funding authorization. When I talk to a lot of loan officers, they're always afraid that they're going to be on an island, there's going to be no training, there's going to be no support, and they won't be able to get their loans closed on time. And nothing can be further from the truth. Right now, the market in general is relatively slow, but these account executives will bend over backwards for you. At IMB, we have so many managers and levels of support between the digital community that we have with our portal and just the other owners and managers that we have. We understand that you're only as good as your last loan. We understand that trust is the currency in which we trade every day. And so first and foremost, the support and the service levels is what IMB values. So I just wanted to shoot this video and explain my history in the industry and what our vision has been when we set out to create IMB. Thank you.